I mine Bitcoin, I mine Ethereum, and I've been doing it for years. And I'm really expanding the part of my business that is literally just entirely a mining farm. But there's been a lot of bad news and just reduction in Bitcoin mining profitability recently. Then enter all the Ethereum mining drama as ETH 2.0 gets even closer. Today, I'm going to break down really what's going on here, why, and how the outlook is great from one point of view, but looking through another lens, it's pretty fucked. Full disclosure and disclaimer, my name's Vosk at VoskCoin, and guess what? I love mining, so that means I'm a little biased. And it's not financial advice. So Riot mined 28% less Bitcoin in July. Riot Blockchain, which is a publicly traded Bitcoin mining stock and really just mining farm, right? Yet they earned $9.5 million in power credits. That's kind of weird. It's kind of interesting. So they reduced its power use in July amid a heat wave in Texas, which led to an estimated cut of 21% in Bitcoin production. So how does that all break down? At the same time, they got 9.5 million in power credits. The CEO claimed that forget about the 28% less Bitcoin, these power credits significantly outweighed the reduction in BTC they mined as far as profitability goes. The energy credits amount to roughly 439 BTC based on a 21.6 BTC Bitcoin price. When applied to anticipated power costs for the months, the power credits and other benefits are expected to effectively eliminate Riot's power costs for July, further enhancing the company's industry-leading financial strength amid a challenging macroeconomic environment for the industry. I go f yourself, Les. You know, you really feeling yourself with that statement. I get it, bro. I went to college too. Yeah, and I when I was studying for the SAT, I looked at the word of the day. In total, though, Riot reduced their operations by about 12,000 megawatt hours in July, which would be enough to power 13,000 average homes for 1 month, their CEO said. Many Bitcoin miners in the state of Texas have agreements, with the Electric Reliability Council of Texas, ERCOT, which operates the state's power grid to power down at peak energy demand times. Basically, this flexibility is supposed to be beneficial for the grid. If you don't know, Riot has about 40,000 machines with a hash rate of 4.2 exahash per second, and they expect to reach 12.5 exahash of self-mining over the next year, which would be almost a 3 times increase, which is pretty crazy, growing towards 400 megawatts. Some of the mining farms that we've toured are only around a megawatt, and they would blow your mind at 1 megawatt. 400 megawatts? Yeah, that's pretty much what happens. But on the flip side, it's pretty bad mining conditions for Bitcoin miners. Bitcoin's down significantly from its all-time high. So what are these Bitcoin miners doing to survive the bear market? That would be me included. So a lot of crypto miners have fixed costs, power, real estate, souped up computers or rigs that do actual mining. Stacy, you sound like your mom's got it going on and you've never mined. Okay, you and your souped up Bitcoin miner rigs, you little freak. But apparently, that's why it can be hell for their margins. The global capitalization of crypto is roughly $1 trillion today, half of what it was just several months ago, before basically the devil, Celsius, started a global recession with their scamming with 3AC. Look, that's my stance and I'm sticking to it. We talked about this previously, but Arcane Research published a report that last month that showed that public Bitcoin miners sold 400% of their production. Do you understand? That's much more than they produced. That's 100%. Okay, 400% is a lot more. That's dipping into the holdings big time. They reduced their overall BTC holdings by 25%. A lot of different reasons why. For example, Core Scientific dumped on you because they said they wanted to enhance liquidity. Bitfarms dumped on you because they said they needed to pay down debt. So make sure you understand that industrialized Bitcoin miners, they're not your friends. They're here, they're cash businesses. They have investors. They have a lot of expenses. They're here to make money. My biased opinion is when do you ever hear about these kind of companies doing anything cool or supporting the community? any kind of grassroots efforts, supporting content creators, either trying to grow the space with unique events. I mean, they're all about themselves and they're all about their bottom dollar. They just simply operate as a cash business to make the most money and stack up some BTC in hopes of appreciation in the future. So let's talk about a different coin. It's been getting some press recently, more than ever. Ethereum, even more so Ethereum Classic. Crypto miner and investor Chandler Gao aims to fork Ethereum as the network prepares to transition to proof of stake. This fork would allow miners to continue operations on a proof of work clone after the transition. Obviously, everybody who's been around knew this was coming. And here is just one of maybe multiple forks that will come out of this. Actually, probably finally happening. Ethereum 2.0 merge and transition, and Ethereum ditching proof of work, which ditches so many GPU miners and even more ASIC and FPGA miners. Remember, GPUs are graphics cards. You make your little GPU rigs, and that's great. There's ASIC miners. They're purpose-built machines. They have custom chips. All they do is mine one specific mining algorithm normally, or a very similar mining algorithm. Then you have FPGAs. They're like GPUs on steroids that are just very cumbersome, difficult to use, and hard to even get the best bit streams. That's the quick gist of that one. And I'm not speaking out of my ass. That is all a lot of personal experience and years of mining. And again, I'm not saying that like my opinion is absolute, but go ahead, go try it yourself, and let me know how it goes. But you're probably thinking what I'm thinking. You're thinking, I can't read this shit. Oh, I can read that though. ETH will be forked. ETH POS versus POW. So I'd love a translation to come out of this, but there is this top comment, or first comment that you see below this tweet, and that's my opinion too. There's Ethereum Classic already, so I don't know how ETHPoW has any real legitimate claim or purpose. It just in the simple fact of like, I mean, we already have Ethereum Classic. Really, the only difference is just going to be like, with this, all the Ethereum you have, you'll probably get 1-to-1 for ETHPoW, Ethereum. So EOW, or I don't know, whatever the hell they're going to call it, ETHPoW. But yeah, I mean, it sounds like, provocative and it gets the people going. But what really transpires out of that, I've seen a lot of forks, and we're probably going to see it go the way of Bitcoin Cash. A lot of people understand that Ethereum miners are kind of fucked when ETH 2.0 hits. But what about all the mining pools? It's kind of an interesting question that not too many people ask, and I don't think it's really worth caring about too much, because mining pools, in my opinion, haven't done all that much for the coins that are mined on them either. But basically, for mining pools, the transition is not that huge of a jump. Pooling companies never did the work of generating computer power themselves. They never sunk money into the soon-to-be obsolete mining hardware. These companies possess human capital, infrastructure necessary to coordinate the pooling of resources, new clients, keep thousands of existing clients happy, I guess. Basically, all right, for this reason, leading Ethereum mining pools are well on their way to transition to staking pools. I think that is true. I think that we will see a lot of kind of build outs like that happen. If not, there's a lot of services that could be, provided in cryptocurrency that would benefit on many fronts. Maybe they seek a stake in an ecosystem. Imagine creating a wallet like MetaMask that is actually good and easy to use and looks good. Yeah, I don't know if you know this, but MetaMask made almost $1 million a day, every single day last year. That's over $300 million. Where the fuck did it go? Why is a tiny startup in comparison, Phantom Wallet, look so much better and have better functionality? It truly baffles me. Taking a quick snapshot in time here per mining pool stats, Foundry Digital is the biggest public mining pool, AMP pool number 2, F2 pool number 3, Poolin number 4, and Binance.com number 5. Via BTC with a significant portion, and the original Bitcoin mining and just simply even mining pool slush pool pulling up the top here of the rear and number 7. And I don't mean that meanly. I just wanted to sound like an announcer and make it a little bit more dramatic or something like that. Ethereum mining pools, on the topic of mining pools and where do they go from here. Ethermine.org, 28% of the known hash rate. F2 pool, Poolin, Hive on 2 miners, Flex pool, and Easel down there. as the top 7 mining pools on Ethereum here. Ethereum Classic, Ethermine yet again, 2 miners, Hive on F2 Poolin, Nanopool, which was one of the worst mining pools I have ever used that I would absolutely completely recommend against using Nanopool. And then Easel down there as well, and 2 miners coming in with a solo op. One of the most blatant scams that I think is going to end up with a lot of people burnt. I hope that's not the case, and I'd even maybe even like to be wrong just for the poor people that are buying these, or they'll be poor after they buy these. A $10,000 mining rig that mines Ethereum and Ethereum Classic. It's made by Bitmain, one of the shittiest companies that makes... They make great miners, but their business practice is absolute shit. They couldn't give a fuck about you, and that's a fact. So, 10 grand, you get this thing, right? It mines Ethereum, second biggest cryptocurrency. And then Ethereum Classic, say top 30 coin. Or you could get this Bitcoin miner. We'll round down. We'll say it's 11 grand. It mines Bitcoin. And that's the biggest cryptocurrency ever. Well, the E9 pool is $60 a day. After you pay your residential electrical, $54 a day. You compare that to the S19 XP, makes almost $15 a day after the electric bill. You're only going to come away with maybe $6, give or take, right? You'd make $2,100 a year with that, or you could make almost 20 grand with the E9. So why are these miners priced similarly? This doesn't even make any sense. Well, that's because Ethereum is slated to move to Ethereum 2.0 and to no longer be mineable. Bitmain is betting that these people will just look at these profitability stats, scoop up all this hardware, and they're going to laugh and take that shit to the bank. And basically, you're on a mad dash to make your money back in the next 6 months with this. But Ethereum is supposed to not even be mineable in 6 months. They've said that 6 months ago, and 6 months before that, and 6 months before that. But apparently, it's pretty real and it's pretty serious this time. It's a situation that's going to leave a lot of people in a bad spot. I don't know. There's a little bit more risk in a way mining Ethereum over Bitcoin just from, the OG status of Bitcoin. But honestly, I don't really even agree with that. Ethereum's never going away whether you love it or hate it. It's got over half a decade at this point. It's very established. It's the core of really cryptocurrency. Like, if you want to think about it, maybe like Bitcoin is the backbone here that really props everything up, but Ethereum is the heart. Ethereum and ICOs really led the 2017 bull run, right? Then it was DeFi summer 2020. And then you had all these alt layer ones competing with Ethereum in the previous bull run, but they're competing with Ethereum. They're not competing with Bitcoin. Ethereum is just at the centerfold of everything. Anyway, it's a big deal, but the price difference here versus their profits, basically something doesn't quite add up. I talked about BlockFi earlier, and I really just wanted to shout them out because they support us with the Bitcoin Supra. But the company that made today's video possible would be Margex, and they claim to be your reliable way to trade Bitcoin with up to 100x leverage, 12x exchanges in one place, bank-grade multi-layer security. And here is a really cool part. No personal details are required. KYC, see you later, right? So you're trading futures, you're trading derivatives, right? You're longing, you're shorting the market, right? So they've got multi-collateral wallets, market at your fingertips. They're supposed to have a unique MP shield system. And what this is basically supposed to do is protect you against price manipulations that would essentially lead to unfair or bullshit liquidations that could completely blow up your position and just liquidate you, lose it all. Please understand that this is advanced level trading. If you're a noob, you need to be careful and definitely start small. I can't give you financial advice, but I'm just speaking what I would tell myself personally. Right? If you want some trading advice, join the VoskCoin Discord server, join the VoskCoin Talk forum, connect with the community, talk to other crypto traders that do this 24. Well, they kind of do it 24/7, 365, right? But what this leverage trading is, it basically you leverage your capital and you can trade a bigger size, right? So you deal with $100 and there's a 1% change, you're up $20 as opposed to $1. You're up 20%, you're up $400 as opposed to $20. That's the appeal of leverage trading. But if you hit your liquidation price, right? Boom, boom, bang, pow. Blown up. It's gone. So it's very easy to use. We got a referral link and a sign up bonus that you can click down and use our code down in the video description below. It's very simple and easy to use, right? You can just come in here and you can buy market, sell market, or you can do limits, longing, shorting, right? Whatever you want to do. You do pay your fees up front, so you can see, although right now I'm up $27 on this trade, if I would close this out, I would absolutely have the unfortunate opportunity of realizing a $9 loss. But that's due to the not that drastic market change, and I only opened this, like an hour ago. As always, have fun, take your time. Cryptocurrency it's a marathon. It's not a sprint, even though it moves at a sprint pace. So it is fun, it is intense, and I hope that the channel helps you navigate it just a little bit better, and I can condense my research and save you time. Hopefully things work out better for you on just multiple fronts. My name is Vosk. You're on the VoskCoin YouTube channel. Please subscribe, hit the thumbs up, leave a comment, let me know your thoughts on this video and what you want us to cover next. And seriously, as always, thanks for watching.